Good morning, everyone. Welcome to Admiral Markets. This is a live webinar. We're going to take a look together here in this webinar at the Forex charts. So thanks for joining. This is I forgot actually the date, the 14th of July, and it's a live webinar. And therefore, I also need to make you aware of certain disclaimers. First of all, that this session is intended for everyone. Is broadcasted to everyone, but may not be suitable for everyone. To find out more information about that and other conditions and details, visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange and global financial markets in general are considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer. Thank you for your attention. And today, our focus is going to be on trend lines. Trend lines, of course, very useful for support and resistance, for establishing breakpoints, identifying break or bounce points, identifying the trend, perhaps even using them as filters. Many of the things that we see here in this list, in this checklist, is actually, trend lines are very useful for that. Now it's a semi-static kind of dynamic line. It does move, along with the time and has an angle to it, or can have an angle. So that allows it to be semi-flexible. It's not as flexible as a moving average, which automatically adjusts to as price moves along. That flexible is not. So sometimes trend lines are going to be very useful. Sometimes the trend lines just don't fit on the price, and that's okay. Then in that case, maybe using a moving average is useful. In some cases, using a trend line and moving average both at the same time makes sense. In other cases, only using trend lines makes sense, especially when price gets choppy and gets rangy kind of, and it gets very corrective. Then trend lines make the most sense. And moving averages don't make sense at all because it's in a range. Moving averages would just go basically yucky. Like what I'm trying to draw right now, there it is, like this. If price is like that, moving averages will do something like this, I guess. I don't know. So it doesn't make much sense. The more trendy price gets, the more moving averages have value, but it doesn't mean that necessarily trend lines lose their value just because there's a trend. Moving averages are useful, but trend lines still remain useful as, in this case, an indication of support. How long can this momentum last, this green arrow? Or within this momentum to the upside, let me get rid of all these drawings. When you have this momentum, you're going to have some pullbacks, some minor pullbacks, and counter trend lines like that could indicate the moment where price makes that break. So trend lines could have two roles: the support, indicating where and when, and the angle of the momentum, but also on the opposite side to show where the breakpoints could be. So that's just a general introduction, quick introduction here on trend lines. Probably most of you have already joined a trendline webinar, I think, in the past, but if you've not done so, let me know. It's always good to know. Let's take a look at the calendar. There's been a lot of Eurozone and Greek news, of course, since we had our last webinar on Thursday. And well, basically, looks like there's still some deal coming. Let's wait and see how the details and all the approvals roll out and are organized, but seems like that is going to happen. We have inflation rate coming in at the usual 10:30 Central European time, 9:30 UK time. ZEW Economic Sentiment Index, retail sales on the dollar, and I think there was a CAD interest rate later this week. All right, so keep an eye on the calendar. Of course, as always. So good morning, Beverly, Caitlin, Jen, and everyone else. And Beverly has enjoyed the Trendline webinar. Okay, cool. Okay, I'll keep in mind. I'll keep that in mind because there are certain rules, kind of ideas I use for trend lines. Other thing I want to show you before we really dive into the live charts here, this is an interesting heat map that you might want to take a look at. There's a lot of cool stuff, if I may say so, on the Animal Markets website, like this heat map. And you might want to take a look at these cool graphs, move versus range, and which pair is basically the volatile one compared to. But basically, it says. Let me explain this one. I don't want to dive into explaining every graph. That could get boring. But let me explain this one. Bear with me. At the bottom, it's pretty cool. You have the number of pips here. All right, and here you see the change in the direction. So minus 1% or plus 1%, bullish obviously or bearish. So how much bullish move did it make, and how much volatility was connected to that? So the pound odd here, for instance, was a lot of volatility, but it really didn't go that far. It kind of ended up roughly in the same, a bit down, but not that much. Whereas maybe the euro odd moved down just a tad more, but had less volatility. Or the odd cat moved actually more to the upside, but had a lot less volatility. Typically, you want to avoid pairs that are in here because they're low volatility and they don't move much. So these are not interesting. Dollar Swissy, Kiwi, dollar Swissy here, pound USD, right? That so far have not moved much. Now this is today, so that can change. Obviously, you want to keep an eye on that too. But yesterday, for instance, maybe it gives a bit more information. It's the same thing, but yesterday, your dollar, great mover, a lot of volatility, and so there's tons of these charts. If you like charts, and I guess you do because you're looking at forex trading and technical analysis, then this could be a very cool market heat map. All right, we could take a look again another time. Let's take a look at euro dollar and pound dollar first of all. I think that from other pairs besides these two, my eyes were geared towards the euro yen, sorry, pound yen and euro odd so far, and dollar CAD. Besides, the typical euro dollar and pound dollar myself. Pound dollar CAD because basically I have it on break even as you can see here already. Took a trade yesterday as this consolidation or bull flag broke, classical bull flag, these two blue lines indicating the bull flag chart pattern. After a very sizable momentum to the upside without any divergence between the tops, and more or less almost a retracement to that zero line. Wait, sorry about that. Apologies. I thought I had this closed. Let me close this program. All right. So good momentum uptrend and then the correction that goes nowhere, right? It goes sideways. Very good example of using trend lines for resistance and support. And personally, I took the trade not even at the best spot. Unfortunately, I took it somewhere here. It traced a bit better, deeper actually, didn't it? But anyhow, I took this breakout candle here. I often talk about the breakout candle, how it pierces through the trend line. This is a 4-hour trend line, which therefore kind of cuts through this trend line. If that's okay for me, I don't mind necessarily having a trend line or a candle pushing through the trend line. That's one of the rules I use. As long as not, an entire candle or perhaps even a group of candles. As long as it's, 1, 2 candles, and most of it is underneath, it's still okay-ish. Especially because on the 4-hour chart, it looks very decent. So the hourly, we had the break here, we had the pullback. Wait, let me make that green, 1 second. Yeah, here, doom, 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 like that. So found that interesting actually here, this spot, because of the potential bounce and continuation, and that's indeed happening at the moment. Let's see. We have to actually zoom in to a lower time frame to see that break and that trend line, because on the hourly you wouldn't see it. And a trend line like that, for instance, right? It's a good trend line because one of the things I look for is a couple of hits. Well, we certainly have that, preferably 3. We have 4. This is a shallow angle. The trend line has a shallow angle, but that's okay because it's in a strong momentum to the upside. And if we're in such a trending environment, then the counter trend line, in this case, will typically be relatively shallow because price is making a correction like this. So this was the breakout spot, but this happened already before. So the only thing what I personally would, we wait for is a hook back here to that broken trend line, or maybe not even all the way there, but perhaps halfway. So that's the trend line on the 15. And this is basically break, pullback, continuation, pullback, continuation after the bigger break that happened yesterday. So we can keep an eye if there's perhaps any pullback. All right. Euro dollar, daily chart. This is what I'm expecting. I already have it prepared so it's easier to see. We had strong momentum, of course, on the weekly chart to the downside. We've talked about that many times, but just in case anyone is joining for the first time, there's a strong momentum that happened 2014, beginning of this year. This is very corrective. Ultimately, personally, I'm expecting a downside within August or September of this euro dollar. But until that moment, we could be continuing with this correction. And at this point in time, I think that this resistance and this support line are key. If price does break through 108.19 here, I think that means that I think there's invalidation of my analysis, and that the wave 4 will not end up anymore at 117, but the wave 4 probably ended up here, and that this could be the downside trend continuation. If price manages to stay above this green line, I think we could see, especially because of course we're heading into the northern hemisphere summer, I think we're going to see 4 to 6 weeks of consolidation where price remains in between the orange and green line. I mean, if you look historically, there's not, I mean, on average, August has not been a month that is known for its breakthroughs and breakouts. I would expect the next 4 or 6 weeks, as these purple lines indicate, to stay within these levels. Now, maybe somewhere at the end of August, somewhere after mid-August, perhaps mid till end of August, I would expect still the bullish breakout just because of the 38.2 fib on the weekly chart. Still holding on to that analysis. It hasn't reached it yet at 117. And I'll only change that if it breaks to 108.19, as I said. And from that point of view, I would expect the breakout then to go up to this level, hit the 38.2 fib and the minus 272 target, and then very quickly turn around for the downtrend continuation down to the bottom and to parity. Okay, so from that point of view, that could happen, I think, in September then, the downside. And then we'll see follow through of the downside in October. This is kind of the time frame that I have attached and the levels that I have in mind, and the larger time frame on the euro dollar. Now, at the moment, there could be not much interesting if price is in between those levels. It is getting closer to this bottom right here. And personally, I don't see any reason to short it so close into support. If anything, it could be maybe perhaps interesting to look for longs because there's more potential to the top here, or maybe even halfway to the top, than to the bottom. So when zooming in, that's the only thing I could see is a range trade. Now, so far, we just posted a new low. So if I use my own time factor rule, I would like to see 5 to 6 candles not breaking this bottom, and then a hook back perhaps for a long, right in here at the hook back with a stop loss below here. That's a trade that can happen later today. So that's what I see on the euro dollar. That's the only thing that I, at the moment, think is interesting. Pound dollar. Well, pound has, I think on the lower time frame, when looking at the hourly chart, a nice five-wave pattern here. So from that perspective, I think any of these fibs could be bouncing spots. And Jenna was already talking about the potential to go long. And I do think there is that potential. Now, price didn't respect much the 38.2 fib, nor did it really the 23.6. So that could mean, actually, it could be two things, in fact, but um, it's, I, it would seem to me that 50 is a decent level that price will respect indeed. But from a confirmative point of view, unless, if someone wants to use a stop loss, the problem with the long right here is that technically the correct stop loss is all the way below the bottom at 153.20, which would require about 140 pip stop loss. So anyone who is okay with that, I think could take, in my opinion, would be okay with a buy. I mean, every trade can turn out a loss, and this one too. Obviously, you have to keep an eye on your risk management, and that's always, of course, something that must be done. And then if this trade is a loss, then that's not a big deal. From my perspective, however, I would probably wait for the 61.8 or wait for confirmation of a bounce here. So I'm still waiting. But I do see the potential for bounces at any of these fibs. Now, using the time factor rule that I have means that basically, let's see, an hourly, the 30-minute chart, even the 50-minute chart are still in a downside momentum. Only the 5-minute chart isn't. The 5-minute chart is approaching a breakout level though. It's approaching a breakout spot most likely because it had already a decent consolidation here and it's pushing down. So there's probably a chance we'll break this bottom and head towards the 61.8. That means that on an hourly, the 30-minute, the 15-minute, the 5-minute chart, this is all in the bearish momentum. I want to see personally that bearish momentum completed and finished. And I want to see, for instance, if it does break here, price hit the 61.8, show 5 to 6 candles not breaking this bottom, that could be, in my opinion, a very good long with the stop loss just below here for a bigger bounce off of the 61.8. So this is my trade plan or trade idea for the pound dollar at the moment. The euro dollar looks, I mean, in that regard, pretty similar, both looking for bounces off support. So we can keep an eye on this 5-minute chart develops. And if it does break this bottom and if it can indeed bounce off the 61.8. Now, if it doesn't, and then I would have to see if it fails to break here, we got 4 or 5 15-minute candles. So I would like to see maybe the next couple of 50-minute candles not breaking this bottom. Then I might change my mind. And that could be already your first indication that the 50 will be the bouncing spot. So this is something that I will definitely keep an eye on throughout this webinar, and something that will remain to be seen still. It's too soon to tell. I'm waiting for basically either one to happen. Now, the problem with taking an early bounce on the 50-minute chart is that it could bounce. Let's say it does this. But the only thing that is very important to keep an eye on is the fact that if it goes sideways like this could still easily be a bear flag. And then it breaks. And on the hourly chart, we know that the momentum is still going. Why? Because the candle low just posted last hour. Last hour's candle set a new low, right? Within this, I mean, if you compare it to this part, right? So from that point of view, the hourly chart still has 5 to 6 hours. It could still break this bottom to continue. 5 to 6 hours, well, that's basically about 24 candles of 15 minutes on this time frame, which means that if it doesn't break within 5 to 6 here, it could remain a couple of hours, 2-3 hours like this, and then still break to the downside. Taking a long, in my opinion, is not bad here after 6 candles don't break this bottom. But there's only the risk that if it does make a bear flag, that's good to get out, because then it could be a bear flag for downside. If a long is taken here, then I want to see momentum pretty soon after that. Within 10 candles after I take it. Otherwise, it's probably going to be a bear flag. Now, I know this is a lot of ifs because, first of all, we need 5 to 6 candles not breaking this bottom before that kind of analysis starts to kick in. But I wanted to warn you for what I would be looking for throughout the trading day. Now, let's see, first of all, because it could easily break this bottom, and that would not be true. But actually, the same stuff I said now would be equally valid for the 61.8 fib, by the way. So it's still useful. All right. The long would be indeed more conservative if the trader waits for a breakout. Yes. If you wait for a breakout, for instance, like here, break above this, that would be another way of doing it. Thanks. There are a lot of angles that we can use to trade, and one of these angles is this trend line. Totally agree. And that would be a breakout trade once price breaks above that at the moment. And that could change this trend line, that could change in the future, but for the moment, this one probably, then that means that there's a potential for that breakout to that resistance line. In the long term, zooming out a bit to the 4-hour chart, ultimately, price needs to break above this orange line for a breakout up to the -2 and the -61.8, which I think is the main target at 157.50, which is the 3/4 level. From a daily point of view, sorry for the mess, but we have this support line basically coming in and this resistance as well, or maybe better here on the 4-hour chart. So it's interesting support line and interesting resistance line. Once this bottom breaks and the support line, we have space down to this bottom here. When this resistance breaks, this resistance trend line, we have space up to what the targets basically, and then this top. So those are, the spaces and breakout, the main trend lines, the main spaces, I think, on the higher, like 4-hour world that could happen in the next week and perhaps weeks. So those are the two perspectives, I think. The long-term perspective and the lines, and then what's going on this time frame. So that, let's see. Fibonacci sequences, yes, we can do that. Let me add the moving averages. And then I'm going to take a look at Wade's question. And then we'll take a look at pound yen and euro odd. And if you have any, and dollar CAD, we can keep an eye on it, still pushing. And if you have any pair yourself in mind, please let me know. All right, we can take a look at that later on too. So moving averages. Now, the reason I do that is because I want to know where this 144 EMA is, because that's kind of like what I call the neutral point. The neutral point in the sense because in the sense that when the 21 is more of a trend, momentum, perhaps momentum indicator, it changes quickly. it flows with price swiftly. So although it may be difficult to see, but here you can see it kind of choppy because price is choppy, so it kind of goes straight to the middle. Here it's nicely trending, here too. So it reacts pretty fast to price. The 144 obviously less. And what I use 144 more or less is to gauge the long-term direction, the more the trend, in fact, if anything. And here you can see when the moving averages are aligned that the trend is nicely up, there's a good cap. Now this is more of a moving average, of course, material, so I won't dive into that too long. But that's why I like to use in any case, the 144 as a reset level, because that's when you get the change there, it kind of resets into a new trend direction. So that's the reason. And yeah, just breaking below it at the moment. Reach the third level at this point. So at this point, let me zoom up to the hourly. 4 and 5 are in focus. We have to keep in mind that 4 means the fourth line here is equal to the 61.8. The fifth is a bit shy of the 78.6. And with fibs, we don't know. It could go all the way down to the 886. It could be a very deep rally. That's the thing. And this could be continue like that and then make the bounce. And that's the thing that we never know. So when trading fibs, it's that's a bit of a difficult kind of double-edged sword in a way. They're very good to trade, but that's some of the risks that can happen. And that's why this is a potential long spot. But there's also the intraday potential pressure, towards those fibs here to continue. So we have to keep an eye on lower time frames to see which one we get, and this hourly as well. From the fib sequence, however, if we do break below, back to the 15, if we do break below the third line here, there's that chance to go to the fourth and even perhaps the fifth. Depends here again if we bounce at this level or not. Let me put on the same sequence. We're still within the third level on the hourly and 4 hour. So it hasn't really accelerated all too far from that point of view, because within 3 it's still contained. The above or below the third I consider to be more of a breakout. So you can see this potential, especially here between the 61.8 and 78.6, could be, especially if it breaks below it, especially a bearish potential there. So from the fib sequence on the hourly, we're more in a bounce spot. But let's see if we get that confirmation. All right, so let's move over here to put some trend lines on. When I was interested in pound, yen, and euro. Let's go there and put some trend lines. See if there are any trend lines first of all. Sorry. All right. Now we can use the correlation matrix, part of the Admiral Markets Supreme Edition plugin, extra plugin for MetaTrader 4 with a lot of goodies, 50 plus features that normal MetaTrader 4 does not have. So that's definitely worth taking a look. And we can see your dollar on this daily chart, pretty high correlated, strong positive correlation. Now, how does that work out with the pound yen? Let's take a look here. Pound yen is not actually here, so I would have to use the euro odd as an example, which is not here. Let's see, euro yen. Euro yen and your dollar. There it is. Strong positive correlation. And the dollar CAD was another one I was looking at. Very strong positive, no, negative correlation, sorry. Negative. And the dollar CAD and pound dollar is a medium. So there's enough differences between, I think the euro yen, let me take a look again. The biggest difference, in fact, is the dollar CAD and euro yen at the moment. Always useful to keep an eye on that. So let's see, pound yen. It has this trend line and perhaps still this support line intact. Well, in any case, it's definitely above support, kind of moving into a bull flag pattern with a strong momentum to the upside. This is the fifth candle that hasn't broken the high. So it is getting a bit shaky if this is, this is still momentum to the upside, which is a positive thing. So let me count the bars here. So from that perspective, I think there's an interesting upside breakout potential of this bull flag. That's what I was thinking about. This is the fourth candle as well on the pound yen, not breaking this bottom. So still too early if this is sorry, if this is a turnaround or not. But anyhow, to recap, basically from a 4-hour perspective, we broke above this trend line, this resistance trend line, with a good momentum, and the momentum is still going on. And I'm trying to see if there's one more push available. Probably that would be the last one. So with this breakout and current bull flag and the current momentum that's going on, I think this could be an interesting basically break, pullback, and continuation. And within the continuation, this could be a break here. Now it is the only thing that I would like to have it break. The only thing I would like to see, sorry, is that it breaks within this candle or next 4-hour candle. Otherwise, the momentum is finished, in my opinion, on this 4-hour chart, and then I want to be careful. So from that perspective, I'm looking for a continuation breakout here, right? But instead of the breakout, perhaps trying to catch a bounce off the bottom of this would be even better. So that's why I'm keeping an eye on how price is reacting in here. So that's basically my thoughts at this moment on the pound yen, if that makes sense. Now let me, in the meantime, look at Wei's question. Please show the difference between an impulsive move and a corrective move, since the safest, easiest way to trade the trend is to play corrective trendline breaks, as well as how to set the targets and trading stops. Yes, I agree. And those are indeed good ones. Let's see. Let me see. Please show the difference between impulsive move and corrective move. Well, the difference, if you're asking about just the observation, is that an impulse has strong candles into mostly one direction. Like the circles here green, you can see most of the candles are bullish, first of all. The impulse should have sizable, relatively big candles for that time frame. And the impulse should have bigger candles than the corrective candles to the opposite side. So here we see bullish candles, first of all, a majority of them. We see, second of all, strong candles. to the upside and not to the downside. And thirdly, there's another thing, bullish strong candles. Yeah, the candle close is near the high in many cases, indicating the control of the bulls throughout that time frame. So those three things. A correction would more or less be the opposite, where there's a mixture of candles, bullish, bearish, 50-50-ish. Candles closes are not necessarily near the lower high. They're more in the middle, a lot of dojis. For instance, this part. And there's a general mix of bullish and bearish candles. So that would be a correction. Let's see. So when you have a correction, let's see. For instance, this is a correction, in my opinion, compared to at least the momentum that we've had here, right? We can tie together that correction by using trend lines, using the tops, for instance, and the bottom sometimes as well, to use a kind of counter trend or corrective trend line, indeed. Pound yen is one example. This 15-minute chart on the dollar CAD is another, connecting the tops here. So let's see. A target, well, I personally use fibs, but you know, there are multiple ways of doing it. Ultimately, we're looking for a spot where price, has a decent chance of hitting, but also not aiming for the stars either. So you want to have a balance. It depends also what time frame we feel comfortable with holding. If you're okay with intra-week swing trades, a weekly pivot point, for instance, could make sense, or a fib target. If a trader is more seeking to get out quicker than looking for the immediate top or bottom, for instance, this top right here makes sense, or the daily pivot points, for instance, or Camarilla levels could be good targets. If you're looking for a big with the trend continuation, however, then maybe even a trail stop is the best, or a wide target and a trail stop. A trail stop could incorporate fractals like this, 4-hour or hourly, or even just candle lows itself, like on the 4-hour chart, more or less going roughly below these candles, maybe giving a margin of, I don't know, 15, 20 pips. Let's see what the difference was here. The low 27.31, 25. So only 6-pip break. So if you use the 15-20 trail below these lows, the current trail stop would be where I have it roughly at the moment. So, and then each 4-hour candle, you're locking in some profit. Let's take a look at the euro odd now, and maybe we can use the same idea. Is there any way to quantify it? Quantify the correction and impulse, like the Fibonacci retracement number, trend filter. But which part? Sorry, wait. Just to clarify, which part to quantify? The trend line itself or the impulse and correction? Perhaps. Let's see. BT is asking about the pound dollar. Yeah, let me do the euro odd. We have some time anyhow before this is ready, okay? And then I'll get back to the pound dollar. The euro odd is in my opinion in a bouncing potential. I know it's in strong momentum here to the downside, but in my opinion, it's at a level that I would expect to bounce. It had a good momentum here to the upside. So I'm still expecting support to kick in around this level, around this 147.50. We got tops here, bottoms here, 3/4 level. We dipped below the 21 EMA, but that's actually, when it doesn't the first time, more of a bouncing spot. That's something you can use moving averages for. Often, for instance, like this here, you see it dips below, it was actually a bouncing spot. The second time it goes through, it makes that breakout. So on average, that is more of a bouncing spot. So using the hourly, we can see we're also at the long-term moving average here, kind of breaking below it. That happens, that's okay. So from that point of view, I thought it was interesting. Now, we see also when on the hourly chart, some trend lines we can draw. This one has only 2 hits, so it's not that confirmed as yet. But probably more interesting is perhaps a trend line like this that has 3 hits. Pretty steep, but that's okay. Or this one, and yeah, it's about the same. And on a 50-minute chart, maybe this is getting a bit too. 1 second. There, that's a bit better. There we go. This trend line. So that trend line could be, I think, an interesting breakout potential because this is a bouncing spot, but we don't know. I mean, no trader ever knows. So when this trend line breaks, it's indicating that this downside is probably over. And if that downside is over, then we're probably bouncing off this support line, this support that I'm expecting. How do I know price is bouncing off the support? Well, if it's breaking above this blue line, that chance is higher. So one of the rules I use is how does the candle break this blue line? So if there's a good 50-minute candle pushing through with the close near the high, then that could be the signal. In any case, a pullback could happen back to the same broken trend line. So perhaps something like this could easily well happen. So that I think has a potential for today. The pound odd probably equally so. Probably equally in a bouncing spot, I think. Maybe not a clear trend line, but this is a bit shaky. Trend line cuts through quite a number of candles, which I don't like that much. I'm not a particular fan of that trend line. Maybe I'll have to use this one. But the same for that pound's potential, I do think, when looking at these corrections. Basically, both of them made a correction to the minus 61.8 target. And you can see that this pound odd was in a big uptrend, eventually topped out, made an impulse, made a bear flag, continued to the 272 target, made a bear flag, and now hit the minus 68 1.8, which I think has a decent chance of a bounce. So those two are definitely interesting. All right, this is the 5th candle, not breaking this bottom. So BT, how do you confirm if price will bounce off 50 or 61.8? And well, there's of course always a probability in general, as you probably know, but just to make sure. So yeah, it's even a confirmation is also obviously a probability. But let's see, because a lot of times price stays there for a while and then breaks to one side. How to read the price direction in one event. Yeah, if it stays around in one spot, that is indeed a good signal that price is making consolidation, which sometimes could really mean it could break to both sides. And if you're in that trade, it could be a very good idea just to get out for break even and re-enter the trade as it breaks out to one side or the other, or perhaps only, if you want to trade it only to one direction or maybe both. But waiting for the break first to happen and then deciding to enter or not makes sense. If you get caught in the consolidation, exiting and waiting for a re-enter is nothing wrong. It's a good idea. That could definitely happen with this pound if it goes sideways. Now, this is the fifth candle. So I have to see how this candle, this 15-minute candle, well, no, 40 minutes from now, reacts. If it breaks to this bottom, I consider this a momentum continuation with some space down to the 61.8. There's not a lot of space, but maybe on a 5-minute chart, there could still be a decent trade, but it doesn't seem like a lot of potential here. 20, 22 pips. If it doesn't break this bottom in this candle, then the likelihood of a bounce or consolidation like this is pretty decent. So to answer your question, BT, basically I count the number of candles to see, which one is more likely. In this case, because we're in a bearish momentum, I'm looking for 6 candles not to break this bottom. Now, that's not the only way you can do that, of course. Price action, just a candlestick pattern could say a lot. If you get, let me give you an example here. For instance, how do we know price will bounce, for instance, off this fib? Hang on. Here. It bounced off the 78.6 fib. Just by looking at the bullish candle that occurred at this spot, that could be another way of confirming that. So price action. Or a oscillator turnaround. Let's see. Here we were making a retracement, and the third green bar here was this candle, which is basically indicating that this downside is over. It's perhaps a bit late, but you still had on the daily chart, this space to the upside left. Sometimes it is late, sometimes it's not that bad. Here on the 4-hour chart, the third green bar here, indicating that this momentum to the downside is over, and we had weakness here. This momentum was over. We had the third green bar here, and we got the upside. So those are some ideas. Yeah, there are ways to quantify via fibs, like the distinction between a wave 1, 2, 3 and an ABC can be done through fibs. This, for instance, when putting a fib on this, basically a ABC here would typically go to the minus 61.8 target, but it exceeded that. It went quite close to the minus 61.8, which increases severely the chance it's more of a wave 3. Now, if it really wants to confirm it's a wave 3, it sometimes even goes further to minus 2000, minus 261.8. But a minus 1618 is almost the minimum needed for wave 3. So, depending on which target it goes, the third wave, you can have an idea about what character it is, 1, 2, 3 or an ABC. And then especially, of course, after that, we get this kind of choppy little correction here, triangle, then the wave 5, followed by an ABC. is likely, as I showed in wave analysis yesterday. So that's one way you can look at the fib numbers to have an idea, like, okay, what type of impulse is it? But maybe that's not what you mean. Because you're asking about the difference between impulse and correction, not distinguishing between impulses, but um, well, I mean, typically if you go to a deep retracement level, like the 886 here, you're seeing kind of a zigzag correction. This is, in a way, a bit of a zigzag here, like this. Whereas a shallow fib would be more of a correction. Like if price stays above the 23.6 and the 38.2 here, like in this case, typically more of a correction. I think with moving averages, it's definitely possible. What you typically see is if it's correction, you'll see more like 21 going flat, like this. Quickly, you'll quickly see it go flat. And with a momentum, you should see a pretty good angle like that. If we add a 8 EMA, or 5, and we make it very thick, then typically you will see this being pulled away strongly, away from the 21, plus a pretty good angle of the 21. And yeah, so that's something that you can see of an impulse. Now, 21 will typically be just flat, mildish angle or flat for correction. And if there is any impulse, it should have an angle, like here. All right, 7 minutes left. This candle's finished. Let's take a look at the euro dollar. Let's see if there are bounces for both these pairs sometime today. Never know, especially the pound dollar. I don't like the euro dollar downside too much, personally. Not much space, but the pound dollar, I in that regard could trade it both ways. I don't mind that much. Let's see. Otherwise, anything else going on? Dollar CAD still pushing up. Pound yen, same sixth candle here. So let's see if these pounds, pound odd, pound yen, pound dollar are indeed in bouncing spots. They've been in uptrends, of course, but they made sturdy corrections. So I have to see. There's that pound news as well, so something to be aware of. That's less than an hour from now. Dollar yen is looking, let me, well, it's looking basically like a pretty strong impulsive rally at the moment. And I wouldn't be surprised now to see a correction to any of these fibs and a bounce back up. Let's see, this is 246. I think that this momentum is over for the moment. This is the 7th candle, and it doesn't look like it's going to break this top at 123.70. So in the next 20 minutes. So I don't consider this to be probably time for retracement. Then it depends how it's going to retrace. And what I mean with that is, if this impulse is over that we've seen, then there are two things. If it is over, then there are two things that could happen. We can make kind of like a bull flag, triangle, kind of a corrective type of a chart pattern. And then probably see a continuation to the upside, or we might see actually more of an aggressive turn back, something like this, and we might correct down like this more impulsively to the 50. Now for the moment, I see pretty good strong 1-hour candles actually to the downside. I mean, they're not bad. Especially when comparing these bearish candles to these and these. It shows me the chance of maybe more of an impulsive correction, perhaps increasing compared to when price was here, certainly, right? Ultimately, this bottom will probably be the kick, the trigger here, and a break below that bottom could be, the zigzag start, perhaps down to the 38.2 fib. From a 4-hour perspective, this is all upside momentum still. We would need a couple of 4-hour candles, basically have to wait till tomorrow probably before this momentum is over to the upside. So if we do get a break below this candle low, there could be a third bearish candle, a fourth bearish candle, maybe even a fifth down to the 38.2 fib, but then the sixth candle will probably get a bounce, maybe the seventh one too, after which we could even see one more correction down. That's something that could happen if we break below this bottom. For the moment, it's still upside momentum, but I do see on the hourly chart signals that it could be over. Now, with the dollar yen, I want to be of the yen in general though. There is a bit of have to be a bit more cautious because the yen does tend to. The yen seems to be a bit of exception that it can keep pushing sometimes more than expected. Maybe all pairs can do that, but especially the yen seems so. So I would personally not be looking for reversal trades here. If I would be in a long, which I'm not, but if anyone is, then I would think that probably moving a trail to here makes sense. A market exit is possible too, but because the dollar yen sometimes makes surprises and still keeps pushing, not sure if that's optimal. So. Let me check the targets here. See, it went past the minus 1618. Which means that this could easily be a wave 3. And we could be now in a wave 4, which means that this fib or this fib could be bouncing spots for upside. All right, now the sixth candle didn't break, and it's important also to note that if the sixth one would be bearish, by the way, in this case, I would still be cautious for the seventh candle, but it's bullish, so it's opposite of the momentum, which means that the 15-minute chart, in my opinion, has completed its momentum with a double bottom, which could merit a long. And I think that does make sense. From that point of view, it's possible. Now, one thing that should be noted is that I don't think that this is the best buying spot, because when looking at the 5-minute chart, we're at resistance. So even though it's a bouncing spot on the 15-minute chart, I think buying makes probably a bit more sense when it dips down, in my humble opinion, to maybe this 154.60-ish, 55-ish, perhaps. When I buy, though, and if I buy, if it gets there, then, as I said, I want to be very careful. I already said it 3 times, but I still want to make sure that everyone understands this, is that it makes a good spike up within the next 10 candles, within 7 to 10 candles. And if it doesn't, it's probably good to exit, because it probably won't go anywhere and it might break to the downside. Also, considering the news is something you want to keep an eye on as well. 45 minutes from now. Let's see. BT is asking, can I confirm that it's a 4 or 5 candles in 1 hour chart as to carry on? Yeah, indeed. 5 to, well, I used to use 5, and then I started to make an exception for 6, because 6. So I use 5 to 6 kind of as the guideline, and use that as the border or benchmark. So I think there's a small window of opportunity for a bounce trade with caution. And I say caution just because the hourly is still in the downside momentum. And the 4-hour made momentum too, I think, because, well, it did post a couple of bearish candles here. So, but especially the hourly is clear in that. So that's why it's possible, but has some, let's say, cautious trade management ideas, I think, connected to it. Now, I promised the euro pound a while ago, and I still didn't look at it. Let me take a look. Euro pound daily charts. Well, we see I would think this bottom is pretty key, because once we break that, we got space down to the bottom, and then below the bottom, trend continuation. We had a support line, so probably a break below the support line could mean the breakout trade for downside. Now at this moment, price is moving up actually. Well, probably I wouldn't be really trading it to the upside, because it's first of all in a big downtrend on the daily and weekly. It had a bearish candle yesterday, and any upside here could be quite choppy, corrective, and has not much chance. There's always a chance, but not something I think is particularly interesting. Specifically, also on top of that, if this is more or less of like looking like a bear flag. Now, unless it maybe strongly breaks out of that bear flag, but I probably would not trade that. Downside break seems the most interesting. That's my 2 cents. All right, folks. Well, just a quick heads up of this week's webinar. We got tomorrow, we're taking a look at strategy. Wednesday evening, Ned is going to take a look at no or low volatile method of trading. And then Ned and I are going to take a look at how to tackle black swan events and impact from news events on Thursday evening. So do hope to see you in that webinar. By the way, just a small promotion for Twitter. Take a look at Admiral Markets Twitter and myself as well, because there's a lot of how do you say it, info that is sent and content, and I think it's worth taking a look at that so that you can keep an eye on the new material. Every time anything new is made, it is sent, and seems to be stuck at the moment, but okay. Anyhow, there is my address at Chris Sворcik, and you can find Admiral Markets by typing in, I don't know why it's so slow, but typing in at Admiral Markets. Maybe too much going on. There it is. Any other particular pair that you would still like take a look at, maybe? I think my grandmother is faster than Twitter at this moment, but or my internet to be precise. There it is, at Admiral Markets. All right, so chart of the day, my wave analysis as well. So hope to see you on Twitter as well. AudioSD, yeah, good one. Actually, we didn't look at that. And neither did Kiwi. We can do that. Let's do that. AudioSD. Still in the bearish momentum. This is candle 4 on the daily. So to me, this is looking like a breakout, but the breakout didn't really have much guns so far, or much steam or power as it approached this bottom. So it's lacking a bit. However, this could easily be a hook back for a continuation of that daily breakout still that happened here at 75. So I think that's still a downside here is still a pretty good option. It is giving a hook back. And it seems to have hit the target when considering this perhaps a zigzag, and was, a corrective zigzag would go up to the minus 1.8. So from that perspective, I think there's a potential for short. Now, we're looking at the 50, we see kind of a triangle almost here in a way. A break of the support trend line could be the starting trigger moment that indicates that this correction is over, hit the target, and there's good momentum riding behind it here in the past, so we can see that follow through. And everything has its ups and downs, so probably go down and then up and then down, but there's always, it's not going to be one straight line, obviously, but that looks like a decent breakout as well. And the Aussie, that lines up with the other Aussie analysis on the Euro and Pound as well, because there I too was thinking and looking for Aussie weakness. So Kiwi, almost the same thing, 2 forfeits. Actually, that was my exit. I missed my exit, actually, upon the candle close here. 54 minutes ago. So probably would just tighten it instead. But this is Kiwi is different, a bit different than the Aussie, because it looks choppier in the sense that this, especially this part, kind of getting a double bottom on the hourly here. So I wouldn't rule out downside continuation on this Kiwi, but more at the end of the day, I think. It could break out earlier, but I needed to make a correction first. I needed to go. Basically, I want to see it make a bear flag first. Then if it breaks that bear flag, that's fine. That's basically what I mean. So anyhow, Aussie seems to be a bit more interesting. Could be good to let this 4 hour candle end as a doji. If it ends, that's maybe even something to keep an eye on, by the way. I'm just thinking about all the angles that could be good to keep an eye on because, this 15-minute break looks good, but 15-minute break can run into big trouble if a 4 hour chart is not set up correctly. So if I look at this 4 hour chart, I see a big 4 hour candle here. So it would be nice if a 4 hour candle here is a doji. If that's a doji, shows indecision and I think makes the path for downside easier. So something maybe to keep an eye on. Beverly, let's see. 2 weeks from have it traded for a year. I'm on 38% profit. That's a great first year. Absolutely. Congratulations. That's perfect. You cannot have it better, really. Awesome stuff. It I think it's difficult to beat because I mean I'm sure there are some lucky people, but um, that took maybe too much risk, and stuff like that. And I mean, there's always a way, but if it's the best way, definitely not. So this is a very good, excellent achievement. I mean, how many people in their first year don't have any profits or loss or even had serious drawdowns? So really cool. Happy to hear that. Excellent stuff. By the way, Beverly, I don't know if you joined the webinar on, I forgot the topic, but it was in that webinar, I was talking about T statistics. Did you join that webinar? Otherwise, I wanted to ask you what your T statistic is, but maybe instead I could send you the formula or I can even calculate it for you. Just send me an email. T statistic, well, if you're curious, I mean, 38% I mean, I have a little doubt, but just out of curiosity, if you're curious yourself, you can check, because you're asking me if it's a good year. What you can do is check the T statistic, and that's basically measuring the distribution around the result. So this is your result, and what is the distribution range around it? The tighter that range, the better it is. The more precise your result has been. The wider the range, the kind of maybe perhaps the luckier the result is, if you see what I mean. So it kind of measures the long-term sustainability versus how much luck maybe there was on average involved. So that's a good way of answering a question like that. So send me an email and we can take a look at that. Okay? Yeah, it's basically the variation indeed. I'm not probably the best one to explain that. But it's indeed the distribution or variation or variance around that result. Alrighty, folks. Well, thanks so much for joining. Great to have your comments and questions. Always appreciate that a lot. And hope to see you in tomorrow's webinar, strategy, same time, same place. And happy hunting. Cheers.